Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 434 on July 3rd, 2026. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Hyperliquid Strategies, Rackspace Technology, NuScale Power Corp, and UiPath, and we discussed 4 new trades on SELLAS Life Sciences Group, the T-Rex 2X Long MSTR Daily Target ETF, BitMine Immersion Technologies, and SoFi Technologies. It's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, the equity markets finished the week higher. The Dow Jones Industrial Average grew 1,023 points, closing at 52,900 points. The S&P 500 index gained 129 points, ending the week at 7,483 points. And now it's time for the topic of the week. The topic of the week is the bigger picture. Sometimes I get so caught up on minute-by-minute price moves that I miss the bigger picture. The market may have fallen 300 points, but I get caught up in some random bullish reversal. That was only a small part of a much larger trading day. I'm sure I'm not the only one out there who's done this before. You look back at your small profit on the day and realize that you missed a much larger profit simply by following the main trend. You might ask yourself, what's the best way to get out of this habit? Well, sometimes the best way to break this habit is that I'll take a break. First and foremost, I step away. And then when I come back, I look at bigger time frames to get a better overall view of the market. Sometimes I just need to expand it out to a 3-minute view or a 5-minute or even a 15-minute chart to help me clearly see what I'm missing on the day. I tend to make the most money when I follow a trend. Still, sometimes I just get caught up trading reversals on the day. So my advice to myself and to any of you who have the same problem is to learn to look at the bigger picture. Expand the time frames so that you can clearly see a larger trend taking shape. Hopefully that will help you make more money this week, and I certainly will be taking my own advice again soon. So let's get into the review of last week's trades. We're going to start off with our covered call on Hyperliquid Strategies Inc. Symbol P as in Papa, U as in Uniform, R as in Romeo, R as in Romeo. At the time, the stock was trading for $8.73 per share. I looked at buying that stock and selling the July 9 call at 75 cents, hoping for a return of 11.68% in 3 weeks. Well, shares of Hyperliquid fell 67 cents, ending the week at $8.06 per share. The call option we sold lost 30 cents, leaving us with a net loss of 37 cents if we were to close the trade out immediately. Now, the stock price is still above our break-even price, which means we are not quite in the adjustment territory. We're still making money on this trade. Also, we wouldn't get paid enough to offset our loss for rolling the strike lower. So all of that means we should stay put for now and give this trade a little bit of room to breathe. No adjustments are needed at this point on this one. Next, we have the cash secured put on Rackspace Technology Inc. Symbol R as in Romeo, X as in X-ray, T as in Tango. At the time, the stock was trading for $5.96 per share. I looked at selling the July 5 half put at 55 cents, hoping for a return of 10%. Well, shares of Rackspace lost 23 cents, ending the week at $5.73 per share. The out-of-the-money put that we sold is still out of the money. The stock price is still more than 75 cents above the break-even point, which means we're still profitable on this trade too. We'll definitely need to keep track of stock in the coming days, but no adjustments are needed at this point on this trade either. Next, we have our credit spread on NuScale Power Corp, symbol S as in Sierra, M as in Mike, R as in Romeo. At the time, the stock was trading for $10.09 per share. I looked at selling the July 10 9.5 put spread at 16 cents. That could give us a maximum possible loss of 34 cents per spread. Now, shares of NuScale Power lost 33 cents, ending the week at $9.76 per share. The out-of-the-money put spread that we sold is now at the money. The stock price is right between our two option strikes, and the spread is currently 24 cents of intrinsic value in the money. That's a problem since we only collected 16 cents for selling the spread. Now, the stock price is also below the break-even price, so an adjustment is justified. The upper call spreads are selling at 8 cents right now, which would allow us to create an iron condor at 24 cents of total premium. We will have collected as much premium as the initial spread is in the money. That's actually not super interesting to me right now. If you create the iron condor, you could still lose 26 cents, or instead, you can buy the spread back and lock in a loss of 21 cents. If you could exit the trade around the midpoint of the spread right now, which is 29 cents, then you could limit the loss on the trade to 13 cents. I might even wait a day or two to see how the price moves in the stock in this coming week, before I decide whether to exit this trade totally or make an adjustment. So lots of decisions to make on this one. I'm going to wait a day or two and then find the best method to limit the loss and or lock in a profit. That's the name of the game, right? Limit loss and lock in profit when you have an opportunity. So finally, our debit spread was on UiPath Inc, symbol P as in Papa, A as in Alpha, T as in Tango, H as in Hotel. At the time, the stock was trading for $10.53 per share. I looked at buying the July 10.5 call spread for 34 cents. That could give us a maximum gain of 16 cents, or that's a return of 47.06% in 3 weeks. Well, shares of UiPath grew $1.15, ending the week at $11.68 per share. The in-the-money call spread that we bought is now even deeper in the money. The stock price is $1.34 above our break-even point. So this trade is working out as planned, thankfully. No adjustments are needed at this point. I'm happy to have gotten at least one solid win for the week, so I'll take it. Now, that's it for the review of last week's trades. This was a shorter trading week due to Independence Day here in the U.S. We are only 2 weeks away from July expiration, so the trades on today's show are inherently riskier because there's less time to make any adjustments. So all trades on today's show use the July 17th expiration for monthly options in July. So we're going to start off with our covered call, like we always do. I'm looking at SELLAS Life Sciences Group Inc., symbol S as in Sierra, L as in Lima, S as in Sierra. The stock ended the week at $14.97 per share. I'm looking at buying that stock and selling the July 15 call at $2.35. That could give us a return of 15.9% in 2 weeks. You enter this trade by buying stock for $14.97 and selling the July 15 call at $2.35. This trade makes the most money if stock prices finish above $15 per share. Break-even price on this trade is $12.62 per share. In real terms, the stock purchase will require $1,497, and you'll collect $235 for selling the option. Next up, we have the cash secured put. I'm looking at the T-Rex 2X long MSTR daily target ETF, symbol M as in Mike, S as in Sierra, T as in Tango, U as in Uniform. Stock end of the week at $2.14 per share. I'm looking at selling the July 2 put at 23 cents, hoping for a return of 11.5% in 2 weeks. Now you enter this trade by selling the July 2 put at 23 cents. This trade makes the most money if stock prices finish above $2 per share. The break-even price on this trade is $1.77 per share. In real terms, you'll collect $23 for selling the put option, and you will have $200 locked up just in case you need to purchase the stock. Next, we have our credit spread on BitMine Immersion Technologies, symbol B as in Bravo, M as in Mike, N as in November, R as in Romeo. Stock ended the week at $14.35 per share. I'm looking at selling the July 13 half put spread at 16 cents. That can give us a maximum possible loss of 34 cents per spread. Now you enter this trade by selling the July 14 put at 74 cents and concurrently buying the July 13 half put for 58 cents. This is a credit spread because we are selling the spread, and this trade makes the most money if stock prices expire above $14 per share. The break-even price on this trade is $13.84 per share. In real terms, you'll receive $16 per spread that you sell and have $34 at risk. And our final trade on today's show is going to be a debit spread. I'm looking at SoFi Technologies Inc., symbol S as in Sierra, O as in Oscar, F as in Foxtrot, I as in India. Stock ended the week at $18.25 per share. I'm looking at buying the July 17 half 18 call spread for 32 cents. That can give us a maximum gain of 18 cents, or that's a 56.25% return on capital in 2 weeks. And you enter this trade by buying the July 17 half call for $1.29 and concurrently selling the July 18 call at 97 cents. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $18 per share. The break-even price on this trade is $17.82 per share. In real terms, you'll pay $32 to enter the spread, and your maximum gain is $18 per spread. Hey, that's it for this week's show. Happy Independence Day to all of you guys here in the United States. And for everyone else, have a wonderful weekend. Have a wonderful week trading. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer, there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.